Opendoor had massive earnings, and just let's appreciate the beautiful earnings call that Cass did, right? The quality, how he answered a lot of questions. We will have another deep dive. This will be part 2 because there is many things to do. But let's look into the chart of Opendoor, what the stock actually happened. The stock went up to about like $5.54 and actually, went down then 14%. Okay, so we we started very strong, but then sold off. We will talk about that, and we will talk about the most important part of the earnings call here. All about it. Let's dive in.
Welcome to the game. I'm the Wolf of Dubai.
Welcome to a brand new video. If you don't know who I am, my name is Danny and I'm looking for stocks that can absolutely explode. Usually growth stocks, profitable stocks, and stocks that have a lot of retail involvement because I love retail. I love you guys. I love when retail followers are buying houses and apartments because they're watching me for 5, 6, 7, 8 years. And I was early on Tesla, on Palantir, on Hood, on Nvidia. So maybe it's worth to subscribe to all of my channels, on my X account as well, and of my colleague Michele, who has another YouTube channel which discusses HIMS, another growth stock. Michele X10 Stocks, just search it and you will find it. He has 2 channels, 2 videos about HIMS, so check him out as well. Now, let's talk about one more thing. We actually traded in our group Opendoor. We had a nice little gainer on Opendoor. We are trading the stock market, the US stock market, every single day. And when you think like, well, trading is very hard, you need a lot of hours, a lot of experience. And that was my vision 4 years ago, where to say like, hey, I want to offer day trading profits all done for you by professionals. We created our software, which I invested over $1 million to create this. And this software allows us to set you all the trades that we are taking as well. And these are the results of our members for a given week. And then you can also see that we have very limited spaces every month because we are very exclusive. You need at least $10,000 with us to start. And then this could be your way from $10,000 to $58,000 in the first 12 months if we have like a fantastic year. We beat everything. Look at this chart. You can see like we made about like 40% while Microsoft lost 30%. Bitcoin lost 40-50%. ARK Invest lost 10%. S&P barely made 3-4% in this tech AI bear market. So you want to be profitable in a bear market so you can flourish through the bull market. All done for you. If this is interesting, check out xndaytrading.com. Now let's dive into the first clip that I prepared here for you. And I'm telling you, the beautiful way he's steering the company to new highs is absolutely insane. And you remember, I'm covering Open here on the search channel since now a couple of weeks because I believe that Opendoor can 10x from here, okay? And I believe that today or yesterday was the first stepping stone on the future. We just saw from one earnings report that they can be profitable, that they do what they say, that they focus on the right things. We will talk about it after the clip. And also, you see that a stock can react quite dramatically, okay? You might remember the day where Opendoor went 60% up because of the new CEO. Okay, so I think that with the right time and with the right, let's say, news, this stock can absolutely explode. Okay, so with that said, let's dive into the clip.
Where is Opendoor at currently compared to expectations and profitability, and where would you like to be? And Ryan Tomasello from KBW asks, according to your accountability dashboard, acquisition contract volumes are running at or below the low end of your targets. Aside from seasonal factors, what are the primary macro or pricing drivers preventing a faster ramp?
Yeah, thanks for the questions. Look, to be blunt, we're right where we need to be. We're on track. If you had told me 3 months ago that we'd be here, I would have told you you're being a little too optimistic. Last quarter, we laid out a 4-step plan, and I think we're agreeing across all 4 steps. We did what we said we would do, and it's working. Our contribution margin bottomed out in September. It has improved every single month after that. We're going to exit Q1 with the highest contribution margin we've had since Q2 2024. Look, it's early, but things are going well. And to be clear about it, this isn't the macro helping us. This is us helping ourselves. So to answer your question, the reason we said our goal was adjusted net income profitability at the end of this year on a 12-month go-forward basis is because that is what needed to make sure Opendoor starts generating cash and doesn't need to raise equity ever again. That's our goal. But just like Google Map finds you different routes to get home, we're finding the best route to get home. And actually, let's take a step back before that. Before we become ANI profitable, we're going to become adjusted EBITDA profitable. Now, I think adjusted EBITDA is not the best metric for measuring our business, and I'm not about to give you guidance. I think our lawyers have very particular feelings about me saying guidance. But to be transparent about it, the plan I have on this laptop right now has us being adjusted EBITDA profitable on the annual basis starting in Q2, right? So things are going well. Things change, and company building is a little messy, but things are going really well. Now, I think there's a question behind a question. There's like an actual hard question here, which is, why are you at the bottom end of your acquisition goals? Let me say two things. First, I reserve the right to wake up smarter every single morning than I was yesterday. I want to learn. And I've learned a lot in the last 3 months. I've learned that the levers we have at our disposal are genuinely working faster than I expected. And we've discovered we've had levers that I didn't think we would have. So if we want to hit the top end of the range, we could do it very easily. But that would come at a cost. And I want to tell you about the cost. Okay, so in a product company, you always basically have two choices. You can invest in product or you can invest in growth. That's the back and forth, right? Engineers are your most precious resource, and they can usually work on one of two things. And like, here's what I mean by this. Like, when you invest in product, you're putting fuel in the tank. When you invest in growth, you're spending that fuel. And this is actually like a key difference between product companies and not. Right now, I want to invest in having the best product we can before we go and invest in growth again. So I'm choosing to work on the funnel rather than the number that just happens to come out at the end of the funnel. Let me give you an example. This actually matters. So early in January, we took 4 engineers aside, and we asked them to work on our mortgage product. Those engineers could have worked on the Opendoor app. And I think the Opendoor app is genuinely bad. And fixing it would be good, and it would lead to growth. But we bought 500 homes last week, and growth is going well, and we have lots of levers. So we chose to work on our mortgage product and our infrastructure over the Opendoor app. And because of that, we're going to launch our mortgage product in beta this week. Okay, let me be blunter. We built a mortgage product in less than 10 weeks. People told me it would take at least a year. We did it in 10 weeks. This is genuinely better for the long-term growth of the company than hitting the top end of the old accountable range. What matters to us is profitability. And in order to get there, the thing that matters is the pace by which we exit this year. What Christy just said, 6,000 last quarter. I am very confident in the levers we have and the levers we have built, and we can hit that pace. I'm very confident more than I was 3 months ago. That's why I'm so comfortable that we can take a moment to spend time investing in product to put fuel in the tank so we can burn it later. I promise I will never, ever sell the future growth of our company at a discount. We're going to do the right thing and focus on the things that matter. Look, our October results proved something. They proved that what we are doing is working. The bets and the actions we've taken are the proof points we need to know we can get to profitability. So we're going to invest in product and then growth.
So here's a couple of things to remember. First of all, they want to be profitable in Q2 by adjusted EBITDA in already in the works, okay? This is insane, okay? This is maybe the most important thing that you need to have taken from this earnings call, okay? Even the EPS number was bad because of a special event that they have to do, which was, I think, a convertible note. Then they don't want to raise money ever again. Also, he said that he addresses, this is what I love actually, he addresses the very critical point. Hey, you mentioned that you want to reach this amount of homes every quarter, every month, but you haven't reached it. So why? And he have like a brilliant, simple explanation. Maybe it was not simple explained, but let me explain it simple because I love to explain it simple, okay? He said that, you know what, guys? Actually, we could reach those goals, but this would mean more cost. I rather build a new product that generates more. I be very efficient and be still profitable to acquire lower amount of homes and therefore have another product that can generate directly profit for the company with the mortgage product, right? Which is launching like already in beta, which is insane how fast. 10 weeks, guys, okay? When other people say, okay, 5 months, okay? So you can see here, we're going fast, we're going efficient, we go in the right direction. He knows his things, okay? I love that approach. I believe that he is one of the best turnaround CEOs that Opendoor can ever imagine, and I believe that we are very, very early on. If you are the same opinion, let me know in the comments below. I would love to know how many Opendoor shares you own. What is your goal? What is your average? Let me know. So I bought the long-term options, which is another $10,000. This is a very small, I play with stocks and then a little bit with options, but I put like $10,000 into an option position for Opendoor till the end of the year. This was a fantastic quarter. I think that we are just very, very early still. You can benefit from a $5 stock, guys. This can be like an $80, $50 stock, okay? Absolutely insanity. Many people will catch up. Many people will FOMO in. So but obviously, if you're interested, then make sure to make your own research. This is never financial advice. And make sure to check out xnDayTrading.com because we have very limited spaces. You can see it on the website. If you click the link in the comments or in the description, there's just a limited number of places every single day. And with that said, I see you tomorrow because the grass is greener always on the other side.